Well, good afternoon again. We're moving on to our next session of the afternoon. So this session is going to look at capital markets, long-term financing for Turkish companies. So Tolga is going to be our moderator for this session. We have two, again, eminent guests with vast experience and knowledge, which they're going to share with us. And hopefully some of the many questions that we keep getting asked, some of them may be answered just now. So we're looking at some positivity here. So if I could hand over to Tolga, and if you could just briefly introduce your panelists, please. Thank you.
Yeah, thank you very much, Chris. So today in this session, we will be discussing capital markets in general and long-term financing for Turkish companies in particular, dealing with the subtopics relating to corporate bond market, and we will analyze the question, will current COVID-19 related disruption will dissuade corporate issuers from coming to market, and we will also analyze Sukuk and capital markets as an infrastructure asset class in Turkey. We will also try to touch regulatory updates in Turkish capital markets, plus COVID-19 and that capital markets outlook in Turkey in general. So my name is Tolga. I am a partner at TOCC Attorney Partnership. I am also co-head of banking and finance, as well as financial services regulatory practices in the firm. And today we have two great speakers. Let me introduce Razvan Dumitrescu. Razvan is a LC2 principal at EBRD. And Razvan mainly focuses on promoting capital markets transactions and advisory projects across Baltics, Central and South Europe, including Greece and Turkey. And Razvan's key past contributions include development of a wide range of conventional as well as Sharia compliant debt products, sustainable finance, including green bonds and environmental, social and governance index, and corporate bond frameworks in Greece and Turkey again. So hello, Razvan.
Good afternoon, Tolga. Nice meeting you. Nice seeing you all.
And our second speaker is Axel Kalinowski. Axel is a head of Central and Southern Europe at London Stock Exchange. And Axel primarily manages the primary market activities of London Stock Exchange Group in Central Eastern Europe, including Turkey. And he regularly meets ambitious Turkish companies and their owners to discuss their fundraising, exit options, as well as the various implications when raising capital from international capital markets. So, hello, Axel.
Hello, everyone. It's a pleasure to be here.
Yeah. So please let me make a brief introduction about what we will discuss now. So I would like to very briefly explain what is happening in Turkish markets in terms of capital market products, recent trends in DCM transactions and regulatory updates. So one of the topics that we need to touch is regulatory updates. So I'm the only lawyer here. So very briefly, please excuse me. I will just give you some insights about what happened in Turkish legislation. So after COVID-19 pandemic arrived in Turkey, Turkish regulator, Capital Markets Board, implemented very important measures with an aim to support and protect market players. And these measures mainly focus on price volatility and market fluctuation. And afterwards, we have seen amendments to covered bonds legislation, where issuance of covered bonds by mortgage finance institutions are encouraged by giving them certain financial and administrative facilitations. Also, in line with the regulator's efforts to encourage covered bond market in Turkey, we have seen certain incentives enacted by Capital Markets Board to facilitate asset-backed and mortgage-backed securities, and it's obvious that these moves by the regulator is to reduce the economic and financial effects of COVID-19 in Turkish capital markets. And we have also now seeing a new legislation study by the regulator on project bonds, which is on the pipeline at the moment. And the project bonds are one of the long-awaited capital markets instruments in Turkey, so that the investors of a project will be able to raise fund and financing through project-based securities. Last but not least, very recent, a couple of days ago, Capital Markets Board enacted a new legislation in relation to note holders meeting regime, and pursuant to this legislation, the relationship between the issuer, the Turkish issuers, and investors will be well coordinated during the life of the bond, as well as in case of default. So, and in terms of the recent trends in Turkish markets, currently we are seeing very good movements, especially in the financial institutions area, in terms of issuance of green bonds. And one of the top tier lenders in Turkey, Akbank, has issued a green bond very recently. And also Vestel, a Zorlu Group company, issued a sustainable green bond recently. And we see some Sukuk activities in the market, but because of a pandemic process, these were interrupted slightly, but the general expectation in the market that the high demand to Sukuk products issued by Turkish issuers will start again sooner or later. So in the framework of what I tried to briefly explain what is happening in regulation side and recent trends side, Razvan, please let me move on the first question to you. So we know that EBRD is a major investor in Turkey, and since 2009, EBRD has invested almost 12 billion euros in various sectors in Turkey, mainly private sector. And EBRD's nearly 7 billion euro investment Turkey portfolio is the largest one among almost 40 EBRD countries, which makes EBRD one of the most significant players in Turkish economy and in general, and in Turkish capital markets in particular. So my first question, in the light of this, what are the EBRD's specific efforts on supporting corporate bond market development and Sukuk in Turkey?
Tolga, and please mind the video, because I think this is the fifth device I'm trying to use, and realize that on the other four I already have an EBRD app that somehow doesn't allow me to connect. So it's good to see this. Well, so you already hinted to some of the developments that the EBRD as an IFI contributes to, and I think one of the key parts, as for the EBRD, we benefit from various tools, I would say. One of them is policy dialogue, in close cooperation with local stakeholders and also international ones, like the Capital Markets Board of Turkey. And in that case, I'm thinking on the bondholder rights that you just mentioned before, so actually involved together with our local leadership in Turkey. But then also we are promoting new benchmarks, such as, and also developed with local stakeholders, such as the Turkish overnight reference rate, TRL. In that respect. So there is a lot of, let's say, actions in terms of the policy part. But of course, what counts is also, and even more important, is the follow-up investments, because at the end of the day, you don't want to promote some regulatory enhancements without actually committing funding as well. So we do have 1.9 billion Turkish lira actually it's one overall corporate bond framework. We aim to promote hedgeable benchmarks in that part. And to just name a few issuances we participated, is like Pasta Energy, Agisa, Renaissance, YDA, Zorlu. So there's a lot of variety and diversity in that respect. but also on a standalone basis whenever we subscribe to Eurobonds, such as the Nursing Court, International Court. So as you can see, there's a lot of traction in that part. But also we've noticed for the past, let's say, 3-4 years, an increase in asset-linked certificates, which is basically the local type of Sukuk. And I think now the share of such instruments in local debt capital markets is like around 10-15%. And that's why we actually went to our risk committee internally and approved 3 different structures, which is Ijara, Wakala, and Murabaha. We are yet to actually subscribe to such a product out of Turkey, but we do hope that in the coming year or two, we would actually see why not maybe even some international Sukuk coming out of Turkey. And that's, I'm speaking at the corporate level in that respect, because like Turkey as a sovereign, it already benefits from being an issuer in the Sukuk space. And as a matter of fact, it actually benefits from being part of JP Morgan, EMBI, diversified index in that area. So in a nutshell, that's let's say the overall picture to provide a bit of flavor where it's at. Thank you.
Thank you very much, which was really helpful to understand EBRD's current position and the intention to support Turkish bond market and Sukuk. Axel, as London Stock Exchange is one of the oldest and most international world stock exchanges, and you have a specific focus on this region, in particular in Turkey. So I would like to learn about your views on the role of capital markets in a crisis, just like happening now, and do you think it can support Turkish companies?
Yes, thank you, Tolga. I think it's a very sort of interesting and important question to think about, given sort of the challenging times that we're going through, all of us right now. I think an important aspect that is always overlooked about capital markets in particular is that it can play a very important role, as we've seen over the last few weeks and months, in terms of helping companies really get through a crisis. Because when you think of it this way, usually in good times, companies have plenty of choice and plenty of access to financing and capital. But usually what happens in a crisis such as this one is that banks, which are obviously an important piece of financing infrastructure, have to, because of risk management issues, often retrench and sort of be more conservative in terms of the lending activities, etc. And this can be quite sort of detrimental to a business that is going through a difficult period themselves, in terms of all of a sudden the tap is turned off and you can't quite access the financing the way you could in good times. And I think this is where capital markets sort of really show the strength that they have, in that companies that have actually taken the time during the good years to build a relationship with investors from around the world can then use that relationship to help them get through a difficult patch. And because investors will have a firm understanding of the business, will understand what the opportunities and the threats are, and because investors usually during a crisis period start to focus on their portfolio themselves to try and help and rescue the portfolio, because obviously they are measured on portfolio performance as well, they will be ready to support those companies. And this is pretty much exactly what we've seen over the last few months taking place. So to give you an example, you wouldn't normally assume, normally you would think that during a crisis period, markets are closed. It couldn't be further from the truth. So the last few months, for instance, in the London market, we've had records amounts of genuine equity capital being issued. So we're close to 30 billion pounds have been issued this year in terms of equity. Over 400 secondary issues, so that is companies that are coming back to the market to raise money for a second, third, or fourth time and get through them. So it's a very important sort of piece of the puzzle and strategic tool that a company has in order to get through this crisis. And it's not always just about working capital or liquidity issues. It's often also about, and this we can talk about it a bit later, we've seen many companies actually have healthy sort of cash balances and are still coming back to the market to raise further capital. And the reason being they see opportunities in the landscape. Some competitors might be struggling, so they see they see an opportunity for them to come in and take and acquire sort of other companies, or just invest further in innovation, etc., in a difficult period, whereas other competitors don't quite have the same ability. So it can be a very sort of important competitive advantage. So I think it's a very, very important aspect. And in general, as someone who works with Turkish companies, but with companies across Europe, I think we still have a lot of work to do in Europe. Because when you look at the global landscape, and Turkish companies and European companies are competing with companies across the globe. They're just not just competing with domestic business, but they're competing often with US businesses now, with Chinese businesses, etc. And I think we are still lagging from a European perspective. We're still lagging behind sort of many of other continents like the US markets or Chinese markets in terms of understanding how to use equity and capital markets for your own advantage. So to give you an example, Turkey, for instance, if you look at the combined sum of listed Turkish company on Bursa Istanbul, it only represents around 25% of Turkish GDP, of annual GDP. In the UK, it's obviously much more substantial because we have London, which is a global sort of financial powerhouse. So there, for instance, the ratio is over 100%. So I think the latest number looked at is 103% of GDP. So it's 4 times the factor of Turkey. But when you look at the entire sort of European landscape and take a sort of a median, it's around 40 something%. So we are significantly behind places like the US, where it would be 130, 140% of GDP, or even China, where it's also very close to 100%. So basically, the London market in the UK is the only exception in Europe where you have a very sophisticated and deep penetration of capital markets. And I think there's a lot of opportunity in Turkey to sort of tap into that.
Great. Axel, thank you very much for this insights about the current situation in capital markets relating to European and Turkish companies, which was really helpful. And Razvan, from EBRD's point of view, how COVID-19 affected the local markets and the potential product development in the wake of COVID-19, developments?
Well, thank you. Maybe just one point to what Axel kind of mentioned. I think one of the benefits in Turkey is that you have a high turnover. If you look at the Turkish markets, I think the total traded volume compared to the market cap in Borsa Istanbul, I think it's something like 190%, which is top 5 globally. So that's one impressive dimension if I were to look from the other perspective in terms of the Turkish market. COVID-19 pandemic, well, I think one of the, let's say, of the benefits of the Turkish market, it's been that structurally it's more skewed towards short-term debt, like 1, 2, 3 years. And I'm now looking at around the spectrum. And I was even looking yesterday, I was trying to do a bit of due diligence, and I realized that across all issuances this year so far, I think the average tenor is a bit below 1 year. Which shows that there was lots of access to finance, maybe either via commercial paper or short-term finance for working capital and liquidity buffer. But that's also maybe since it's an emerging market and there's a bit of more needing in that respect. And then it goes through more kind of a structural trend, like usually you would see this part in terms of shorter tenors. In terms of product development, I need to admit that we're actually looking at both like sustainable finance, like labeled bonds, apart from the ones you mentioned of ACMAC and Zero Energy. We actually those issuances were put on hold just because of the pandemic. One of them also being the Sukuk. So definitely there is a bit of a mind. There's a shift in the mindset in that respect. So people try to see what to be like in the next a couple of years for like even short term. But if I look more like into other countries, and maybe like Korea is not country operation for ourselves, but it's a long-term business partner of Turkey. I was fascinated to see that within 1 month since the outbreak, they actually put in place like different funds, even TP buying programs, or just basically being part of there. But for the time being, for us, in terms of Turkey, I think it's mostly, I would say, on hold, like we're still waiting for, especially in the sustainable finance, because we do have green bond F5 framework for banking purposes to invest in green bonds, but also we leverage through partners from Amundi to invest in green bonds of corporates in that area. But hopefully, like clients in Turkey would realize that, look, the pandemic is here, it might stay or not, but I think what's important is to embrace more the sustainable finance side as a way to gain resilience on long term. So even if you have a short-term gain in terms of pricing, ultimately on longer term, you're better off going into this direction. And there's also where the market is, I would say, global trends in terms of ESG allocation and passive investment. So it's kind of goes hand in hand. And I believe our colleagues from London Stock Exchange, Axel, benefits a lot from this position, both from FTSE Russell and LSE Group. So yeah.
Yeah. Thank you very much, Razvan. Yeah. My second question to Axel. Axel, you very effectively explained us how active and competitive the current markets at the moment in the wake of COVID-19, even if the adverse effects happening in the economies in macro and micro levels. So I would like to hear your more specific experience and views on, in terms of capital market activities and response through the crisis. What kind of deals and companies and sectors have been seen in London as well as Istanbul?
Yes, very happy to sort of touch on that. I think it's quite interesting to look at that. As Razvan already sort of mentioned, I think Borsa Istanbul, for instance, when you look at it, it's a very interesting market. Like you say, it's one of the most liquid markets that exists. It's largely explained by sort of the very big participation of retail sort of in the market, and in that Turkey is doing extremely well, even on a global benchmark. We wish in London we had as much sort of retail participation, but the truth is London is a very institutional market. So in many ways, actually, the Istanbul market and the London market are very, very complementary, because you have Istanbul, who is very, very strong in retail, and you have the London market, which is very, very strong sort of from an institutional investor perspective. And structurally, that makes for a very different kind of markets. So what we've seen now during the crisis, as I mentioned before, is that particularly in London, there has been a lot of sort of access, sort of companies accessing sort of capital markets to help them get through this period. As I mentioned before, so for instance, our secondary follow-on issues are up 60% on 2019. So there's 60% more equity being issued by listed companies than there was in the year before, so which makes this year a record year for us. And when you look at the type of companies that have been sort of active on the markets, it really goes across various sectors. So you cannot even single out specific sectors. Some sectors some companies are from sectors that have been very heavily sort of impacted by this crisis. So when we think about airlines, there have been a couple of airlines which sort of have come to the market. Just like Ryanair, for instance, raised 400 million to sort of, even though they have a very healthy cash balance, but just to be sort of certain, because no one has really clear visibility what's going to happen also next year. So they decided to come to the market. There's a hotel business, lots of hotels, for instance. You can imagine hotels have been also sort of impacted quite significantly, that has come to the market. And there's a whole host of companies, other companies like Rolls-Royce, for instance, sort of more industrial-based companies have come to the market. But every company is coming to the market for different reasons. Some are doing it because generally, economically, it's been a very challenging period, and they just want to have this additional sort of cushion. Others, for instance, a company like Keywords, which is in this case an Irish but actually very international game development business. You can imagine online gaming, for instance, has been very popular. So there's been winners in this crisis as well. And they, for instance, raised money to acquire certain businesses in Latin America, for instance, or in other parts of the world. So there are very different reasons why companies are coming to the market. But generally speaking, investors have been supporting those companies, and also prices. When you look in terms of price developments of where indices are, in March there was a very sharp correction, as many of you will know. But actually, when you look at indices where they are today, so whether we look at BIST, sort of Istanbul Stock Exchange sort of indices, they are very, very close to all-time highs again. So they're not very far away from all-time highs. The same is true in London. It depends what indices you're looking at. AIM, for instance, which is our market for high growth businesses, is pretty much exactly the level it was pre-crisis. Some other indices are also just lagging a little bit behind, but basically shows there's been incredible resilience in the market and a lot of activity, which is maybe somewhat counterintuitive to what you would normally believe if you're not following markets every day.
Yeah, it's great optimistic views from expert in this area. So it's good to hear all these positive and optimistic views. So thank you, Axel, by the way, for your insights. And Razvan, as you are aware, after the pandemic arrives, EBRD established certain frameworks and packages, and one of them is a solidarity package under resilience framework, of which aim is to support financial institutions and to channel the funds taken from EBRD to their small and medium enterprises. And we have seen a number of deals in the market where EBRD lended certain loans to Turkish banks, financial institutions, non-bank institutions, to enable them to provide more liquidity to fund their customers. But from capital markets and debt market perspective, what is EBRD's COVID-19 response? What is your COVID-19 response for Turkish capital markets?
Tolga, that's a very good question. Well, so first of all, as I was saying, it took us almost 1 year to prepare the product internally in terms of Sukuk. So we have this ready, and hopefully once we have the issuers tapping the market, we are basically there. And it's the same with the ongoing frameworks we have in there in terms of the corporate bond side. So those facilities are still in there, and we actually welcome, and we look very much forward to tap new issuers in that respect. From a capital market so far now, I think it's mostly on the policy dialogue, and as I was saying, on the bondholder rights. But then also we are locally supporting for the third-party recognition of the local CCP TOCC Bank, together with the CMBT. That's more of a long-term, I would say, project where basically, as my European Commission, we have also the assessment. It's something that I think the UK will have to go as well, and there's a third-party equivalents for the CCP. So these are the key areas, I would say, in that part. So for the capital markets, it's not per se that we have a specific tool, because at the end of the day, I think what we have in place for the solidarity package, it addresses the current needs in terms of short-term liquidity and working capital, which you rightly mentioned for the resilience framework. We, of course, we also have another great program, a trade facilitation program. And then even on the fast-track restructuring for distressed clients. So I do feel that now is the right time for IFIs like ourselves to step in and partner more with ongoing clients and also new ones in that respect. And where possible, to channel towards capital markets access, either on debt or equity. We are aware that in Turkey, as in other emerging markets like Poland, Baltics, there might be some sizable IPOs coming, which is good, and subject to like our internal details, we might participate in that. So we are there for the long term, I would say. And I think you raised a key point in terms of project bonds part legislation, which we all welcome. We've seen, I think, like it was almost like 10 years or 12 years ago when R1 highway in Slovakia was refinanced through a project bond, and I think they got like 15% better pricing altogether. But also there is no kind of construction risk anymore. So that's something that we will definitely look into. And why not maybe also via Sukuk to refinance some of the hospitals that we might have in there once completed. So there are various tools available, but it's also a matter for the clients how to feel best place, because you might have some markets also like Turkey that you might have better leverage through local FIs, through financial sector to disseminate and to go directly where it's needed. But I'm confident that once you have once again some activity in terms of maybe IPOs, which I think will come back later this year, in terms of sizable ones, including in Turkey, that will provide a new kind of confidence level to issuers to tap the market. And of course, subject to meeting all our criteria, we'll definitely try to be there if possible. So yeah, it's more like promoting what we all stand for and ensuring that the client needs are addressed. And it's also a bit of lobbying, I would say, like maybe pushing some of the issues maybe to go more into sustainable finance. Axel mentioning in terms of London, maybe record issuances. Another part that is also like nearly the same, I think, for the corporate debt side, which is fascinating to see because, okay, it's a bit of negative about the pandemic, but also it creates a bit of opportunity for Europe, UK, Turkey to promote more on the capital markets. That's a sustainable way to raise capital. And I feel that such pandemic, it's also the right place to do, because if a company or an issuer feels that you've done that in some kind of distress situation and you managed to raise capital there, it's kind of sticky. You might say, oh, why not actually try to tap again and rather reduce a bit the challenge to banking or other sectors, to try to have a good mix in their respect, which brings like a fast track positive development, I would say, especially looking from a capital markets side. So that would be a nutshell.
Yeah, thank you very much, Razvan. Axel, similar to EBRD, the question to Razvan. My question is how London Stock Exchange Group works with and supports Turkish companies through capital markets and via capital markets products. What are your views?
Yes, there are quite a few things that we are trying to do and help with. Normally, in a normal environment, I have the pleasure to be in Turkey face to face and be able to meet with Turkish companies, but also with the wider sort of ecosystem, including colleagues at the EBRD who sit in Istanbul, as well as friends at Borsa Istanbul. So actually London Stock Exchange and Borsa Istanbul have a very good relationship. We collaborate on the index side and the derivative side, for instance. So I have the pleasure to be in Turkey, and normally I'm looking forward to sort of the next opportunity. But yeah, essentially we as London Stock Exchange are trying to be a helping hand. So we're trying to help companies understand what are the options for them, what's the best route for them, and then help them connect with the right people. So we obviously have a number of Turkish companies that have their own listing in London, have bonds listed in London. So there's been a lively sort of engagement. Even now, during the last few weeks and months, there are Turkish companies which have been looking at what can be done from a capital market perspective. So obviously we are here to help. It's not just myself, but the entire sort of team that we have here at the London Stock Exchange. But apart from that, we operate a couple of interesting sort of segments. From a capital markets perspective, we have a growth market which is called AIM, which basically works with innovation-driven companies, so often younger tech companies, for instance, younger life science companies, or generally companies that are very high growth. So this is a market which is all around growth, and AIM is probably most successful growth market around the world, simply because it's been around for a very long time, like 25 years. We celebrate 25 years anniversary this year. So, so it's been around for a long time. There are close to 900 plus companies listed on AIM of all kinds of sectors. So this is one way to work with SME type businesses. Of course, we work also with multinationals, and Turkey has an exciting group of bigger companies that are active in Turkey, but also have grown and are active across the region. So Turkey is obviously strategically, from a geographic perspective, in a very sort of exciting position. So accordingly, companies have a lot of opportunities. But equally, we have something a little bit different, and just to touch on something other than capital markets, we developed a program called Elite, which we in Turkey also partner up with TOCC, so the industrial sort of association. And basically in Elite, we're trying to work with companies and to help them understand. So it's nothing to do with capital markets. It's about helping companies understand what are the different sort of alternative funding options. As you scale, as you grow as a company, also your sophistication in terms of internal structure needs to grow, but also what sort of funding tools you use. And we try to basically work in partnership with other institutions to help those companies grow and scale successfully, domestically, but also international. So Elite is an international program. We have close to 40 countries. We have over 1,000 companies in the Elite program, and it's all private. Those are all private companies. There's no requirement to think about IPOs or capital markets, anything like that. It's really meant to help companies grow and connect to like-minded entrepreneurs and CEOs. So this is another aspect how we work with Turkish companies, which is completely separate from our sort of regular capital markets activities.
Yeah, thank you very much, Axel. Last point, I think we have nearly 3 minutes. So my questions to both of you, same question. So as you know, the fiscal measures implemented by governments against the novel coronavirus need to be harmonized to combat climate change and need to ensure an environmentally sustainable recovery from the pandemic. So in my view, the whole market must promote a green recovery if we really want this recovery to be sustainable. So in terms of green financing and green bond and green loan markets in general, can you please share your very brief insights about your institution's green finance activities during COVID-19 situation?
Razvan, do you want to go first?
Okay, sure. So I think in June or July, the bank's board adopted a target of 50% of our annual business investments to be in green economy by 2025. So we literally target to be a green bank by 2025, across all the spectrum of investments. That also means that from a policy dialogue perspective and all the capital markets transaction, we would have a focus on the sustainable finance agenda in that area. Of course, as I mentioned, we already have 2 or 3 frameworks in place for FIs, also for corporate bonds, for corporate issuances to tap the green bonds market, or like the labeled bonds. But of course, also we map from a funding perspective whenever we issue under our sustainable finance framework. And what we've seen now, even like last week, I was impressed to see our peers from AIB launching the $0.5 billion fund for investing into emerging champions on the bond side. So we do partner. We ensure that basically what we stand for and what we aim for in terms of the green finance is actually replicated. And at the same time, we cooperate with the EU, with the Commission. We're looking into what it takes to take a CMU ESG index in that respect to be developed by the private sector. Green capital markets in the Baltics, ESG ratings with the likes of Analytics, and I think also like the London Stock Exchange will have a similar program in there. And then we've seen this developing also like in Poland and also in Romania, like similar programs. So I say there's lots of hype. There's various tools available, and what's important is that we all connect and kind of converge to the same best practice. And that's an area that I think also on the Sukuk side, if you want to have this kind of Sharia compliant sustainable finance, developing even further, it needs kind of a standardized part. So yeah, there's where we stand.
Thank you. Axel?
Yes, I'll try to keep it short because I think the next session is starting soon. So yeah, London obviously, ESG and green are topics that pretty much have come up in every conversation I've had now with the last year or two. It's amazing what sort of the change that is happening. As Razvan rightly said, in terms of investor base, there's a huge growth in terms of investors really looking heavily what criteria to apply, and it's increasingly all around ESG, so environmental and green sort of social, governmental, and sort of green criteria that investors are applying. So accordingly, we're working and helping investors understand what companies are doing, as well as helping companies understand what investors are looking for. London has been ranked as #1 globally in terms of depth and quality of sort of the green ecosystem that exists out of 67 financial centers in the world. So there is incredible know-how and quality, and I invite anyone sort of listening who wants to learn more to just simply get in touch.
Yeah, great. Chris?
I think we've just about come to the end. A very interesting discussion, and thank you, Tolga, for helping us navigate through the discussion. Expertly done, and also to the speakers. So I'd like to express my thanks to all three of you for actually sharing your insights and your knowledge. I'm sure all beneficial, and any questions that we do get that you haven't answered now, we may be able to take offline. So, Tolga, thank you, and thank you to your team.
Thank you, everyone. Thank you.
Bye.
Thank you. Bye-bye.
Bye-bye. Bye.
So we're gonna have a break for half an hour. Yeah.
Mm-hmm.
Then we will start again at 2 o'clock UK time.
Yeah. For